Good morning. Wishing you a wonderful Monday and wishing you a great week ahead as well. Welcome to today's episode of Morning Well. We're talking about three things today. Stocks rise on good data last week. Household staples cost to go up. The week ahead loaded with 181 earnings on the S&P 500 and the FOMC. Investors piled back into stocks Friday, lifting all three major US indexes as fresh data underscored that a strong economic recovery is underway. The rally capped a volatile week for US stock market, during which major indexes widely swung in both directions. Stocks started Monday lower, then posted a midweek rebound before tumbling sharply on Thursday on reports that Biden is considering nearly doubling capital gains taxes on the wealthy. The news, which immediately sent stocks lower, seemed to all but cement sizable losses for the week. Yet, economic data released Friday instead spurred a sharp rebound in equities and trimmed weekly losses for all the three indexes. The S&P 500 finished the week down 0.1%, while the tech-heavy Nasdaq posted a 0.3% weekly loss. The Dow Jones ended the week lower by about 0.5%. The losses snapped a stretch of weekly gains for the US indexes. Data firm IHS Markit said Friday that its US services jumped to 63.1 in April from 60.4 in March, signaling the fastest expansion in service sector activity since data collection for the series began in 2009. Meanwhile, manufacturing signaled a steep rise in output in April, even as firms said production capacity was affected due to the issues of sourcing raw materials. At the same time, data from the Commerce Department showed sales of new single-family homes in March rose more than 20% compared with February, which is the highest reading since 2006. So good data overall, and which is what led to the Friday rebound. Last week, a couple of companies reported, Procter & Gamble and Nestle. I just wanted to cover them over here. The costs of running a household are going up. Procter & Gamble will this fall start charging more for household staples, citing rising costs for raw materials and higher expenses to move goods. Global supply chains were already struggling because of the pandemic, and the February freeze that triggered blackouts in Texas led to a shortage in raw materials that sent prices for polypropylene and polyethylene and other chemical compounds to their highest levels in years. The maker of Gillette razors and Tide detergent is the largest and biggest consumer products company to announce price increases. At the end of last week, Nestle reported Nestle sales got boost from consumers stuck at home. The world's biggest packaged food company reported last week its best quarterly sales growth in almost a decade, driven by strong demand from Nespresso pods, Nescafe instant coffee, and Starbucks branded products. The Swiss company made coffee a priority in recent years as part of an overhaul, and it has paid off during the pandemic big time. ADRs of Nestle rose about 2.4% on Thursday of last week. For the week ahead, more than a third of S&P 500 companies are expected to report their quarterly results in the coming week, including Apple and Tesla, as companies detail how the reopening world is affecting their business. Tech giants will dominate the coming earnings calendar. In addition to Apple and Tesla, other big names providing quarterly updates would be Microsoft, Google, Amazon. In total, 181 companies in the S&P 500 will report earnings this week. Earnings this quarter are on track to rise 33.8% year over year for the companies in the S&P 500 based on actual results and estimates. That percentage could mark the highest such increase since the third quarter of 2010. Padding the gains are easier comparisons to weaker earnings a year ago quarter when the onset of the pandemic hurt many businesses. On the revenue side for 2021, first quarter is on pace to increase about 7.5% year over year, also based on actual results and estimates for companies that are yet to report. That's on the earnings. I'll touch upon the names that we'll be looking on for later. The FOMC gathers for its April meeting midweek. Jerome Powell has said policymakers are in no hurry to withdraw support even as US economy rebounds. Bloomberg Economics expects the policy statement to acknowledge continued acceleration in the economic recovery, but communications will stop well short of providing further guidance on the conditions which would warrant a tapering. China, on the other hand, gives its first big peek at its economic performance in April on Friday. Consensus is for manufacturing and services PMIs to slow from March, but they should still stay well within the growth territory, is what Bloomberg Economics is predicting. The Bank of Japan meets on Tuesday, and while it will probably stand pat, there will still be a lot for investors to watch. Its financial risk assessment is worth a closer look, is what Bloomberg Economics is saying, after it decided in March to give its operations staff more flexibility on asset purchases. On the earnings bit, apart from the names that I mentioned to you, we'll be looking out for AMD, Twitter, Samsung. On the finance side, we'll be looking out for Barclays, BNP, Deutsche Bank, HSBC, MasterCard, Visa and Santander, and UBS as well. On the healthcare side, AstraZeneca, Bristol Myers, GlaxoSmithKline, Merck, Novartis, Gilead. This is a loaded week. Industrials, Airbus, Boeing, Caterpillar, Ford, UPS. On the consumer side, Starbucks, Spotify, Comcast, Sony. On the oil side, BP, PetroChina and Total. Totally a loaded week on the earnings front. Last but not the least for this busy week, US GDP forecast is to show robust 6% growth in the first quarter, boosted by government stimulus. Looking ahead, the second quarter may be even stronger, putting the US economy on track for its strongest year in decades. That's the update. It's going to be a busy week. Take it easy, and I'll talk to you tomorrow.